GameStop is still making news as retail investors continue to cause waves. But is there more than just the everyday story on Reddit? To tell us his thoughts is Jason McIntosh from Motion Trader. Jason, welcome to the show this afternoon.
Cara, Andrew, good to be on.
All right, GameStop, still trading at those highs. What are your thoughts on that move?
What a fascinating story. It's been amazing to watch this unfold over the last few days. Really interesting. Yesterday, I was hearing that behind this whole move might be a big options play. Whereas, so what I was hearing was that there was a lot of volume in short-dated, out-of-the-money calls placed before the price took off. So how the story goes, which I heard, was that so these calls are in place, then the price started to move higher. And so what happens then is the dealers who wrote these calls, well, they're effectively short because they've written the call options. So then they've got to cover themselves, so they come into the market and start buying the stock. And then there's this feedback loop, which continues to push the price higher. There's already a massive short out there, and this is why the stock is of course targeted in the first place. And the whole thing feeds upon itself and shoots up. And it's amazing, like if this is true, it's amazing how a relatively small amount of capital can push a market so far. Like, I don't know what the leverage on the options are. Say it's 1 to 10, for instance. So every dollar of stock in an option, the dealer's got to go out and buy 10 stocks in the market, 10 shares in the market. So a lot of leverage at play there.
Well, I was just going to say though, but do you think perhaps it's too sophisticated just for the simple retail trader to initiate? But perhaps do they see that even what they were doing would be the catalyst for the hedge funds to obviously have to cover the positions, and then you're going to see the price, as you see, that loop, positive feedback loop where the price just goes higher and higher.
Yeah, it's look. There's a lot of talk about how the small guy on Reddit is giving it to the big Wall Street players. That's been a popular story. It's a great tale of David Goliath sort of thing. But look, as you say, Andrew, I just think it's. I just wonder, is this just all a little bit too sophisticated for the guy at home on the chat site, coming up with this this international news headline story? I don't know.
Do you think it's over? I mean, because we've obviously already seen the price. I think it came off 25% overnight, bearing in mind, of course, where it's gone. And there are going to be obviously losers in the story.
Oh, I suspect we've seen the highs.
Yep.
But this is one of the inherent dangers of short selling. You've got your profit potential is limited to 100%, excluding leverage, but your downside is unlimited. So you never can be sure whether it's over. I suspect it is, but the politicians are talking. Has there been manipulation at play? You don't know. It's just a fascinating story in history that we'll look back on. Whether it has ramifications going forward, don't know.
Well, we've already seen a spillover. Obviously the short squeeze now on silver, and now we're talking about uranium at the same time.
Well, silver was up 9% last night.
Yeah.
But as I heard you say earlier, there's just not an excessive short position there, so it seems more like just market scuttlebug, really, driving that. Tesla last year, there was there's talk of like a lot of call options being bought, and then you link back with this, the beginnings of this sort of move that we've seen now, but on a larger stock. Now they're taking the gain to a smaller stock and gotten a massive and oversized reaction. It's no one knows whether we can get ever get the full details. Who knows? But it's nonetheless interesting to watch.
Yeah, you obviously need a lot of money to move that silver price. But you mentioned stocks there, you mentioned Tesla. But what are you looking at when it comes to your favourites at the moment? I know that you've mentioned OCC there. What are you liking when it comes to that one? Yeah,
Orthocell. It's a $90 million capitalised stock, not in the all ordinary. So I suspect most people wouldn't. Most investors, it's just not going to appear on their radar. It's really interesting. It's a regenerative medical company, so they're focused on cellular treatments, basically.
Yeah, I think in the States the focus is on dental regenerative.
So they've recently just had a big approval. They got FDA approval in the US for their dental, bone and tissue treatment. Now that's a big deal because it opens up that US market, but they've already got approvals in Australia and the EU. So now they've got 3 of them. So that's probably going to help them partner in terms of rolling that product out. And it's like this market that they're involved in is, it's huge. The company says it's something like a $17 billion market. And this is a small company and it's just getting underway. And they've got another product which is coming up to the approvals phase, which I really like. It's a cellular treatment for tendon issues. So it's focusing on things like the shoulder, the elbow, hip, hamstring where it attaches in, the Achilles. Yep. And look, as a lot of people know, like when you have the tendon issue, it's a real problem.
Well, as you get older, you know that.
Yeah, well, I do a bit of running, and I can tell you, I know a bit about tendon issues, and I've got a stack of masters athletic mates who'd love a treatment for their Achilles issues and their dodgy hamstrings. Yeah. And but the big thing with this treatment is that it's injectable. It's not like usually you've got to do a surgery. This is injectable. And I think this is potentially like it's a real blue sky opportunity if they can get it approved, if they can roll it out, if it all works as advertised. The recreational market, the elite sports, it's a big market, and if something can make that space easier to manage, you never know.
Yeah, as you say, the biggest hurdle seems to be those regulatory approvals, which they've obviously taken a big step to get over that one, at least in the States. Jason, another one you're looking at, Calix. Now, this is involved in Europe in the LILAC project, which is the Low Emissions Intensity Lime and Cement project. Just tell us what that is and what the involvement is.
Yeah, it's another one of those companies. Like, it's only been listed for around 12 months, this one, and I just love the company's tagline. It's Mars is for quitters because there's only one Earth. So it's all focused around the environmental sort of aspects, which I think is going to be a growing theme over the next coming years.
Yep.
And so what they have there, they're involved in wastewater, crop protection, CO2 emissions, and so the one that we're talking about here, this initiative in Europe, it's around reducing CO2 emissions from cement and lime production. And so they've got an initiative underway where they've got EU research funding. They've got some big industrial partners in the project. They've just done phase 1 of that, which was successfully piloting a test in Belgium. They now moved to phase 2, where it's scaling that up to a demonstration plant. The big news out, it was only last week, I think it was on Friday. A big global cement business called Cemex has come in as one of the partners in this project, and I think that gives real look. It's a validation of what they're doing. I think.
Well,
the share price has spiked on.
Yeah,
that.
The share price went up 15%, I think, on Friday. But we just had those charts up there. It's come off about 11% today. But up over around 75% over the past year. So obviously see that.
So this is a stock that this triggered on my so I scan the market daily for what's moving and looking for. This is how I find these ideas which are a little bit sort of off mainstream. Look for the price action, then see what the story is. So this triggered an interest back in I think it was August, around 90 cents, and like some people hear now that it's $1.50, it's too late. But the way these things often work is following the price action and buying into a higher price is often a good thing, because the path of least resistance is the direction it's currently heading. An uptrend will often trend higher, downtrend lower. So I'm quite open to buying something which has run a bit, may consolidate a bit around here, but overall, looking at this as a medium-term possibility with, you can manage your risk by getting in around current levels. I think there's a lot of potential upside should this story take. And look, management has about an 8% interest in the company, which is always a good thing. It's good when management have a vested interest on the same page as shareholders. So I think this is one to keep an eye on.
All right, your last one. We've talked silver, we've talked uranium. What are you looking at when it comes to the resources space? I know you've got Tribeca Global Natural Resources on your list. What do you like about this one? Yeah, look, I'm bullish on commodities in general over the medium term, next 5 years plus. I think we're potentially heading towards a cyclical up move in commodities generally. And I look at how do you
potentially strategically position yourself for that move. So the other two stocks, I'm looking at more like a tactical position. You sort of get in, you're with the momentum, you let that momentum run and exit when it turns down. Resources, I'm looking more strategically, and you go, okay, what are the options? So you've got like, the BHPs, Rios, Fortescues, but they're heavily tilted towards iron ore, which is fine because I think that all benefits from this, but I'd rather a more rounded approach with a lot of different aspects. So what I like about Tribeca is that, one, it's global. They're looking globally for their ideas. They split their portfolio into 3 tiers. They've got 50% in they call it a green theme. So it's around commodities like copper, lithium, nickel, uranium, all the things you need to electrify the economy, and uranium, which is like a low emissions, well, almost a zero emissions energy source. Then they've got 30% in the monetary expansion theme, which is about central banks continuing to expand their balance sheet, the potential for inflation over the medium term, not so much, wake up tomorrow there's inflation, but building over the next few years. So that's the precious metals side. Then 20% in base metals, which is all geared towards infrastructure and fiscal spending. So it makes a whole lot of sense what they're doing. It gives broad exposure to a lot of global players, which you wouldn't get normally if you just went to the ASX and wanted to buy a copper producer. You'd probably get BHP, which is like copper with other things. And so it's purpose built. NTA is 20% below the market price. So look, it makes sense from an entry point of view. I think it's just out of favour. Generally, the fund's out of favour, the sector's out of favour. Interest is coming into these things. Copper's at a multi-year high, but it's coming off after many years of being sold off. I think it's early stages. I think a play like Tribeca could be a good play. All right, well, Jason, that's a diversified portfolio you've given us just there. Orthocell, Calix, and Tribeca Global Natural Resources. Thanks so much for joining us from Motion Trader. It's been great to come in. Thank you.